Hello all. Good evening. In today's video, what I will just brief you about what is going on globally. So, what is the latest global developments? So, what we have found is that recently China is facing some crisis, and as we are aware that the global economy is basically still in the headwinds are there, and the global economy are facing their own challenges. And so there is a very interesting thing, like there is a Chinese proverb which is called we are living in interesting times. So it is basically a Chinese curse that gives you that you stay so that your life is very interesting, in the sense that you are going through very tumultuous period, or global volatile time. So you have seen in 2020 the COVID, and after that the Russian invasion on Ukraine. After the Ukraine was actually going to join in the NATO, and which actually Russia did not like. And as a result, we have seen that there are a lot of energy prices has spiked, and a lot of issues we have seen. And recently we have seen that there is a huge global debt issues as well. Many developed countries are facing huge debt problem, including US, and US has actually revised their ceilings almost 78 times. And recently, after Parliament has passed a bill, they have again somehow managed this to increase the debt limit. But still, they have been downgraded by the global rating agency Fitch, as the US also facing some of the downtrend in the global banking sectors. And so anyway, and so even Moody's has downgraded a lot of banks in the US. So what we have found is that recently China is trying to increase their level of economic activity, and the China central bank has cut the 1-year loan rate by 15 bps to 2.5%, which was followed by July 2023 data indicating weak consumer spending, declining investment, and increasing unemployment. As Mr. Tao Wang, who is the MD and Chief Economist of UBS Hong Kong, has highlighted that China's overall debt to GDP ratio is about 300%, and it is continually increasing, which is the highest among emerging markets and higher than most advanced economies as well. But while China's central bank debt is relatively small at just above 20% of GDP, debt at the local government level is almost very high. It is more than 70% of GDP. And they don't have enough cash flow to pay interest on their debt. So some parts of the corporate sector, especially property developers, are also facing challenges. Even we have seen one of the largest property developer in China, Evergrande, and has defaulted and has gone for the bankruptcy. Now Russia also central bank has hiked its major interest rate from 8.5% to 12% after the ruble crashed to a more than 16-month low against the dollar. The ruble has shed around 30% of its value against the dollar since the beginning of the year. On the other hand, Japan's economy exceeded expectations with a 6% annualized growth in April to June, driven by strong auto exports and tourism offsetting the slower post-COVID consumer recovery. And UK headline inflation has dropped to 6.8%, though the core CPI, which is basically excluding energy, food, alcohol and tobacco prices, remains stringent at 6.9%. Marginally above the consensus estimate at 6.8%. Now at the Indian economy, what we have seen that the headline inflation has increased to 7.44%, is just above the 6.40% of the consensus estimates, which basically breaching the RBI's upper tolerance limit. But this basically reflects lagged impact of recent rise in tomato and certain vegetable prices, including cereals and pulses. The broader point is that producers are, now actually the retail price is facing the CPI is very high prices, and we have seen the monsoon and rainfall becomes irregular and not actually evenly happening in all regions of in India. and we cannot rule out the El Nino regarding uncertainties. So we are seeing some upside in the vegetable prices. Vegetable prices have increased recently a lot. Tomato prices have given the some upwards push, but spices and vegetable prices are actually created a lot of price pressures. And state-wise, if you look, that Rajasthan has faced the highest inflation at 9.66%, followed by Jharkhand at 9.16%. So in the August policy, RBI has kept the repo rate unchanged at 6.5%. Subsequently, the standing deposit facility rate remains unchanged at 6.2.5%, and the marginal standing MSF rate is 6.75%. Now, RBI has highlighted a little bit hawkish tone going forward. So, food inflation might pose certain upward trajectory, as headline inflation, after reaching a low of 4.3% in May 23, rose in June 23 and expected to surge during July-August 23, led by vegetable prices. And possible El Nino weather conditions, along with global food prices, need to be examined carefully against the backdrop of a skewed southwest monsoon so far. CPI inflation projections for 2023-24 is revised to 5.4%, with Q2 at 6.2%, Q3 at 5.7%, and Q4 at 5.2%. CPI inflation for first quarter of 2024-25 is projected at 5.2%. GDP growth for 2023-24 is projected at 6.5%, with quarter 1 at 8%, quarter 2 at 6.5%, quarter 3 at 6.0%, and quarter 4 at 5.7%. The incremental cash reserve